G'day guys, Seeney here and welcome to another episode on the Australian Wealth channel, and in this episode we need to talk about the Australian housing market because things are changing. So thank you guys so much for watching. Please make sure you like and subscribe to the channel. It really helps to get these videos out to more people. So thank you guys so much for tuning into this video. You might have noticed that I haven't made a video for quite a while, and that's because things have been insanely busy with the business now that we've come out of lockdown, amongst a number of other different things. So I'm glad to be back making this video about the Australian housing market. A lot has happened since my last video. There's a lot of changes that have begun to happen within the housing market. So I wanted to go through and explain some of what's going on, so you can potentially prepare yourself for some of the things that are going to be coming down the track. So the first thing that I think is really worth talking about is what property prices are doing all around the country. So what we're starting to see after the latest data that we've received is that we're getting a two-speed housing market here in Australia, which is pretty much exactly what I said was going to happen over the last year or so. So if we have a look at the core logic data, which has just come out, we have something very interesting that we're starting to see. So in the Australian housing market, we're seeing that Sydney and Melbourne are actually starting to slow down. So this isn't just month over month either. This is also for the quarter. We've actually seen a decline in housing prices in Sydney and Melbourne. Now, to be fair, this is happening mostly at the top end of town, most of the premium, expensive properties. This isn't happening so much in the lower price brackets here in Sydney and Melbourne, because we know that, you know, the Sydney housing market is not just one market. There's a lot more going on than just one thing. It obviously depends suburb to suburb, but we're starting to see some trends, and it's important to keep in mind of what's happening with these trends. So for this month, we've actually seen Sydney decline by 1%. So 1% down, and in Melbourne, we've seen a decline of 0.7%. So 0.7% down. So things are changing. You know, we've just had basically constant growth for the last little while, and if you've bought a house pretty much anywhere, it's been phenomenal. But of course, things are changing. So now if we turn and we have a look at the Brisbane market, we're actually seeing the reverse. We're not seeing declines. We're still continuing to see the prices go up. So for this month in Brisbane, we've seen a 0.8% increase, so nearly a 1% increase over the month. Over this quarter, it's been nearly 5% up. So Brisbane is still growing very strongly. And on top of that, we have Adelaide, which has grown 1.8% this last month. So we're still seeing massive growth in Adelaide. Now, there's a number of different reasons for this, and this is one of the reasons I've invested in Adelaide is because it's incredibly affordable. People are much more prone to be doing remote work, so they can actually work from anywhere. So a lot of people might actually arbitrage working for a Sydney company, but being able to work remotely and operate out of, say, Adelaide, where prices are much cheaper and it's much cheaper to live. For these reasons, Adelaide is just continuing to perform incredibly well, and on top of this, there's only a certain amount of insurances that will be given to building companies every single month, so they're kind of limited by the amount they can actually build over in Adelaide, which means that there's still a lot of demand going forward in Adelaide. I personally know of developers that have raised their prices 30 grand to keep it comparable with what the market is actually doing for their future house and land packages. So our properties in Brisbane and also in Adelaide are doing absolutely phenomenal. Thankfully, our property here in Sydney is not a massively premium property that you would expect in the Sydney market of, like, you know, $4 or $5 million. So we're still seeing a lot of strength there, which is great, even knowing there's been some broader declines across the board. So it's still been quite a great time for Australian property. If we have a look at some of the other capital cities, we've also got Perth, which has seen growth of 0.6% this month. Hobart is 0.3%, so that's slowed down drastically from what it was doing. Darwin is up 0.5%, and Canberra's actually seen a 0.1% decline. So across the board, if we combine all of the capitals, we're seeing a 0.3% decline, and nationally, if we combine everything, we're seeing a 0.1% decline. So these are not massive drops at all. This is just part of the natural flow of what the property market does. So, of course, there's a number of contributing factors to why the market has dropped a little bit. Now, obviously the first one, and this is, I personally believe that this is the most obvious reason, is affordability constraints. Now, in Brisbane and Adelaide and other cities around Australia, this isn't as much of a problem. But however, in Sydney and Melbourne, things are incredibly expensive by any stretch of the imagination for most people. So we're seeing that these interest rate rises that are coming are going to have a much stronger effect on people in Sydney and Melbourne than some of the other capital cities where they don't have the affordability constraints. So things are incredibly expensive here in Sydney and Melbourne. There's no other way of saying it. So as a result, there's a little bit of that steam that's kind of getting taken out as interest rates start to go up. Now, the Reserve Bank has basically been front running what they're going to do. Now, this is a really smart strategy for them because it means that they might actually get the effect of people reducing the amount that they're spending in the economy without actually having to lift interest rates too much. So it's actually a very smart move that they're doing. They're telling everyone that interest rates are going up by a certain amount, but it's actually slowing the spend because people are a bit concerned of what's going to be coming in the future. So it means they might not have to raise interest rates as much. I think you can expect them to go up significantly, as it is important to prepare for that. You might be paying a little bit more on your mortgages, which is why I've said it's really important to be buying cash flow positive properties from the get-go, and buy a lot too, because as interest rates go up, they're not going to be quite as cash flow positive. So it's really important that you're out in front of that and that your tenants are going to be covering the mortgage on that property by a long way. A lot of these people that have invested in Sydney, now they're not only going to be slapped with declines, but if they're also already negatively geared, that is going to be even more expensive. They're going to have to be putting more and more money into these loans. So you're getting negative growth, and it's also a problem in terms of negative gearing. So that's the reason I've actually bought Brisbane and Adelaide, because the properties I have are insanely positively geared. We're getting really good return out of them, but they're also in a much more affordable region, which means they have much more room for growth. So the biggest reason that property is going to see a little bit of an issue over the next couple of years is, of course, interest rates going up. So this is only going to be a temporary thing. Eventually it's going to get to a point where it's about level. It's not going to be a detriment to property. It's not going to be a gain on property. And then likely the cycle will just continue again as the economy slows, and they'll have to drop interest rates again. Who knows how low they'll go next time. Now, the second reason that the property market is not growing as much as it was the last couple of years is because all of that crazy demand has been satiated. Basically, everyone that wanted to get into the property market has finally had an opportunity to do it over the last couple of years if they were already in a position to buy. So the property market is much more balanced now. It might not be like 10 buyers for every single property. It might be more like 2 to 3, depending on what the property is. So we're seeing a bit of change here in the Australian property market. So I thought I would keep you guys updated with what's going on. Thankfully, my purchases are looking really great at the moment, but I'll keep you updated with that. And if you guys like, I'll do a fully dedicated video breaking down what the values are and what the dollars are that I'm making out of each one of these properties. So thank you guys so much for watching. Please make sure you like and subscribe to this channel. It really helps to get these videos out to more people. If you are interested in investing in property, I have some great contacts I can get you in touch with to get you started on your property investment journey. I have a link to WeMoney in the description. Also, it's how I track my net worth over time. It connects to all my accounts and everything, so that way I don't have to go in and update everything manually. It just does it automatically. It's a great app, so I've got a link to them in the description. So thank you guys so much for watching. Please make sure you like and subscribe. My name is Seeney. We'll see you later.